Slide changers. Yeah. Bismillah Rahman Rahim, and good afternoon, everybody. Honorable Session Chair, Commissioner of Bangladesh Securities and Exchange Commission, Dr. Shamsuddin, Honorable Chief Guest, Mr. Abdul Rauf Talukdar Sir, Governor Bangladesh Bank, Honorable Moderator, our dear Atir Rahman Sir, and all the distinguished panelists here. Everyone sitting here is much more knowledgeable and experienced than me. I happen to be here possibly because of the reason I've been working in capital market arena for quite some time. And I also see our beloved Joshim Bhai, the FBCCI president, everybody, all the distinguished guests, other speakers, panel speakers, media. Welcome all of you to this presentation. Before starting my presentation, I have got a 25 minutes time, so I'll try to cover it in 20 minutes time actually. So before starting my presentation, I start with a very positive note about Bangladesh. I think many of you may not know that in 1971, Bangladesh poverty rate was 73%, meaning that a person's income, per day income, less than $2, at that point in time was the definition of poverty line. So 73% people were under poverty line. And yesterday, our Prime Minister here in her opening session told us that now the poverty rate is 20%. In just 50 years' time, a country achieved that is a remarkable achievement by any standard. Bangladesh also is almost self-sufficient in food production, second largest producer of the garment industry in the entire world, third largest producer of vegetable, fourth largest producer of fish, and sixth largest producer of poultry. So the country is very fertile, so we are very sufficient in our food production, and poverty alleviation is on our way. Before starting, the final point is that Bangladesh GDP in 2008 was 100 billion US dollar. Mind you, in 2008, just 14 years back, we were a $100 billion economy, and today our Prime Minister yesterday also mentioned our GDP is 460 billion. So Bangladesh took 38 years to reach 100 billion economy, but in last 14 years, from 100 billion, we have reached to 460 billion. So with that positive note, we'll start our presentation, and I'm sure we'll show some challenges, and the topic says that how can we develop long-term markets. So we'll discuss about some challenges and also think about how we can move forward. So you can see here the number I have already mentioned. In the last decade, Bangladesh GDP growth rate was 6.5%. Many countries in the world had not have this kind of GDP growth for a prolonged period of time. And the last year it was 7.1% in 2022. There are forecasts by global players like CEBR. They said that Bangladesh economy, which is now 34th largest economy, will be 20th largest economy by 2037. Bangladesh is projected to be the 23rd largest GDP country projected by PwC in 2050. HSBC told that Bangladesh will be the 9th largest consumer market by 2030. If you look into Bangladesh's rising consumer class, our per capita income is now 2,800 plus something dollar, which is higher than India. But there are people whose per capita income is more than $5,000 in this average, and this number is now 12 million. And Boston Consulting Group says that by 2025, it will be more than 34 million. So we call it middle and affluent class, MAC population. So MAC population growth rate, if you compare Bangladesh, Vietnam, Thailand, Philippines, Indonesia, India, the growth rate is highest in Bangladesh. So we are coming up with a huge population, almost 34 million population having $5,000 economy by next year, by next 2 years' time. So that is creating a big consumer market. We have another very strong point that our average people's life age is very low. Median age is 27.6 years. Almost 65% population are less than 30 years of age. Economists and social scientists tell it as a demographic advantage. So this kind of demographic dividend is possibly very, very positive for Bangladesh in future. in Bangladesh nowadays, many of the delegates may not know that Bangladesh did not, our annual ADP, annual development program, or annual budget, operating budget plus capex is now around 90 billion US dollar. But many thing has actually we achieved in the last 2 decades. Now Bangladesh can think of this kind of large project. You can see in the slide that Rupur nuclear plant, Matarbari power plant, Podda multi-purpose bridge which already been delivered, Podda rail ring, Dhaka metro rail, Chattogram Coxbazar railway, Kornofuli underwater tunnel, Dhaka airport third terminal. These are only few in the massive infrastructure works going on in Bangladesh currently. Another very positive thing happening in Bangladesh, that every month the people who are going to international market for their job, or what you call expatriate people, the number is actually progressing every month. Actually in January and February, more than 100,000 Bangladeshis left Bangladesh for a better future, and also they are the number 1 pillar of Bangladesh economy. More than almost $20 billion they send every year in Bangladesh. So this number is growing. I think that's a very positive thing. So talking about all positive things, now there is a discussion in the press, media and everywhere that Bangladesh possibly is facing some kind of a challenge in managing its economy. I think the challenge is a part of life. And what are those points that people talk about challenge? We have a negative balance of payment. I think 2021 was a very significant year in terms of negative balance of payment. We have seen that suddenly import has risen to 90 billion US dollar, export was $60 billion. So there was a $30 billion plus trade gap. And that's why we had a current account deficit of more than $13 billion. But I think thanks to central bank governor and the Ministry of Finance and our Honorable Prime Minister leadership, I read in the newspaper that last 6 months trade gap has been reduced significantly. Although there were certain measures that we will not import some luxury goods, but I think that the right direction we are moving to. So this is one challenge, that how can we maintain current account deficit. Our forex reserve, somebody is saying that it's now 4 months average import bill if we consider $7 billion requires every month. So if it goes down to 3 months level, then we can have some problem. But I think the indications are there, it will not go to that level. Our currency has depreciated by 35% in the last 1 year. And there is concern that if we cannot manage our negative balance of payment, it can go further. But I think the directions we need to watch very carefully. And world commodity price was high, but good news is that I have checked with the international commodity price websites. Most of the major commodity prices are almost 25% down by this time. And oil price is also coming pre-war level. Lots of other things are happening, that we are curtailing imports. We are negotiating with different countries for bilateral arrangement. We are increasing fertilizer import. We are negotiating with multilateral organization, and as a result, IMF has recently approved a $4.7 billion loan. And mind you, this IMF has loan has a 2 component: extended credit facility and resilience and sustainability facility. This resilient and sustainable facility is first in any Asian country that IMF has given. And they agreed that in 6 tranches they will give the money. I think that's a very positive development about Bangladesh, although that will come with some kind of a painful reform. I'm not going into that. So this is the overall economic situation and infrastructure happening in Bangladesh and recent economic challenges. Now, how does it fit with our presentation to the sources of long-term finance? How can Bangladesh arrange these long-term funding needs for this huge infrastructure development? If we look into this slide, you will see that in 2020, we needed $18.9 billion for infrastructure, and we arranged $13.3 billion. So there's a $5 billion plus gap. In 2030, we're expecting there will be a $8 billion gap. In 2040, $10 billion gap. So if every year Bangladesh needs average for the next 10 years, $25 billion. And if we can arrange internally around 18 to $20 billion, we have a gap of $5 to $7 to $10 billion. This is the challenge, that how can we manage this funding gap. From where we get the funding? Mostly international, G2G, either Bangladesh, China, Bangladesh, Japan, Bangladesh, other countries. And the multilateral agencies, World Bank, IMF, JICA, ADB and others. But majority of the funding still for the local business, local infrastructure, local industry are coming from the local sources. And here, the picture gives a very, very clear that Bangladesh is heavily relying on the banking system for generating project financing, long-term project financing, and industrial financing. In $13.8 trillion total outstanding loan in the banking system, 99% of the capital origination are happening from the bank. If we look into the capital market, I mean, in the last 10 years average, our banking system gave us $1.16 trillion every year loan. Our capital market average, we raised 10 billion. So it's still 1 to 2% of the total money we raise for the business, for the industry, for infrastructure. So here comes that important role. How can we reduce the over-reliance on the banking sector and develop a strong capital market where the capital market can be a source of long-term funding? And if you look into the last 10 years, capital market fundraising, you will see that its average is not more than 10 billion taka. In the banking book also, they are investing 30% in the long-term funding. So banks normally are commercial lender. They should not go for very long-term funding because their deposits are short-term. So if they take short-term 1-year deposit and lend 5 to 10 years project financing, then there is a asset liability mismatch, and you can see in this graph. And if this mismatch continues, there are stress in the banking management. And for that reason, our NPL is also relatively higher compared to Thailand. In Thailand, the NPL ratio will be 2 to 3%. Like in India, it is similar to us, but recently they have managed it better. Our NPL ratio is now around 8 to 9%. But since I was working in the banking sector, if we consider the rescheduled, restructured, or other loans which are not really regular, we call it extended NPL. I think Bangladesh banking sector NPL can be relatively much higher. So that is a problem in the banking sector. So if that continues, that business and everybody infrastructure funding rely on the banking system, that will create more NPL problem, although there are other issues, not only this long-term term, 10-year only. So what is the solution for long-term funding? Banks has an asset liability mismatch problem, sometimes tension of deteriorating asset quality. So possible solution is the capital market. There is a saying that any country is developed if the country's capital market is developed. Look at America. This is the largest capital market, largest economy. Second largest capital market, China, largest economy. Germany, largest capital market, larger capital market, largest economy, larger economy. So if we talk about G8 countries or G20 countries, everywhere you will see a correlation. If the capital market is developed, country is developed. So I think there is no option for us to look into higher capital market participation. Now, why the companies and corporates or business are not coming for raising money from the capital market? There are a couple of problems. One of the problems is that corporate houses do not have correct books of accounts. Many corporate houses has got books of account which may not reflect the actual situation because they sometimes cannot manage tax and VAT. There are competitions. Some of the operators are not paying right kind of VAT and tax, and that's a good operator also cannot disclose their book because they lose market. So because of this fear, many corporate houses are not interested to come to the capital market. Also, the valuation methodology in the capital market, although we have been changing the valuation methodology for quite some time, and current SEC is also very dynamic in looking into how can we help and accommodate companies to come into the market. But it looks like that big, large, efficient companies are not satisfied with the current valuation methodology. So we need to also work on this, and we have already discussed with the regulator, and they said that they are open to discuss with us. Another point is that long-term funding always bank-driven because getting money from the bank is much easier. I think why an entrepreneur will go to capital market, open his book, go for an issuance of IPO, credit rating, information memorandum preparation, underwriting, lots of process and almost 12 months time period. But in a bank, he can get the money in just 3 to 4 weeks time. So it's much easier to get money from the bank, so that's why every businessman goes to the banking system first, and they are not willing to open their book into the public because of possibly many information they don't want to share with the competitor. Why the bond market is also not coming? Because if we'll see in just next slide that Indian bond market and capital market, if you look into this slide, you will see that it's massive. Indian economy is 10 times of Bangladesh economy, $3 trillion plus, also 8 times. But our size is not 1/8 of India. It's much, much smaller. So that indicates that in a similar region, we can have a better bond market in Bangladesh. So why bond market is not happening? Because again, it's easy to get bank loan. If you want to issue a bond, a company, it needs to appoint an issue manager, credit rating, information memorandum preparation, pricing discovery, and the procedure of approval, and the investors' appetite. Because our demand side, there is not enough pension fund, life insurance fund, mutual fund industry is only 2-3%. These are the major buyers of the bonds in any market. So our mutual fund market is very nascent stage. There is no life insurance penetration is less than 1%. So without life insurance, mutual fund, pension fund, and other university endowment funds are major buyer of any bond market. So the demand side major problem. On the supply side, it's much. Corporates do not want to go to the market by raising by issuance of bond because they think it's time consuming, it's cumbersome, cost is higher, and another difficulty is that there is not enough transaction in the bond market in the secondary market. Recently, bond market transaction started in Dhaka Stock Exchange, but I don't think it is going anywhere because the transaction is very, very small, insignificant. So we need to really look into why the transactions are not happening, because if the transaction starts happening, then we'll get the yield curve. And once we get the yield curve, pricing will be easier for us. So there are other issues. So I think, I don't want to go into the detail, but a lot of improvement scope is there. If you compare the Indian market, you can see that Indian market, there are more than $5 billion market cap companies, 122 companies are more than $5 billion. In Bangladesh, I believe there are also at least more than 100 companies can have $1 billion valuations. But those 100 companies do not want to come to market as a listed company. Also, they do not want to raise money from the bank. They are all in the banking system. So we need to, this is the area where we all need to work together. And if you look into the market cap to GDP ratio in India is 95%, ours is 19%. So as I said earlier, the comparison with the Indian market is going very, very fast. If we look into our long-term funding, another area is FDI, the foreign direct investment. And foreign direct investment curve, bar for last 10 years shows that it's average $3.5 billion. And if you look into the bar for India, it's massive. Massive money is coming to India through foreign direct investment. Another area is private equity and venture funding. I'm sure Khaled Kadir Bhai is here. He will take. Last year, India got $20 billion plus money through the private equity route. So we need to do something on that area. Why? These foreign investors do not come in Bangladesh, they come to India. I think foreign investors look only major one item. How can I exit? Once I get into this country, what are the ways we can exit from the country? So we need to really go for a predictable policy so that they can actually look into for next 5 to 10 years time that, okay, if I come to Bangladesh and I invest in private equity or I invest in any company or I directly invest, I can take my company to IPO, I can sell it, I can remit my fund easily compared to Vietnam, India or other frontier or emerging market. That will be easier for them. I think we can really look into the valuation methodology of IPO in India. It's like the merchant bankers decide the price band, more disclosure basis, not merit basis. We are also disclosure basis, but I think we can have some knowledge on India. We are working, and we are also giving recommendation to the regulator on this occasion. Indian bond market recently they have taken a major thing. I think they said that if any business wants to raise money for expansion, at least 25% incremental borrowing has to be issuance from the bond. and that has to be disclosed in the annual report. So any business who wants to expand, at least 25% has to be issued by the by issuance of bond, and they want to target the bond issuance size by 2025. They want to double this size by 2025. So I think Bangladesh is also doing a lot of things. Whatever points I have mentioned so far, these are areas of improvement. But as I said, we have come a long way in the last 25 years' time, last 15 years' time. And what we need to look into now, I think many people will debate when we saw the Federal Reserve System's Chairman Powell was giving his congressional hearing on March 7, every congressman was pushing him that you are raising interest rate, meaning that you are pushing the US economy to recession. You are pushing that more unemployment rate will be there. But still, Chairman Powell was telling that we need to do it for long-term sustainability of USA. So I think for long-term sustainability, we have to do a couple of things here. So we have to rationalize the interest rate. I think there are certain issues on the interest rate fixation. Foreign investors do not like it. Also, in inflation environment, that may not be the best way to manage the economy and interest rate scenario. And the market-driven exchange rate, I think Bangladesh Bank recently has really come a long way in just last 6 months' time to come a market-driven exchange rate. I think now it's very close to the curve market. And also bond market development, also an issue. We need to reform in tax administration, more tax GDP ratio, one of the lowest tax GDP ratio in the South Asia, Bangladesh. We need to increase tax revenue, and the energy pricing needs to be based on a formula basis, which is already IMF prescribed. And of course, Bangladesh Bank, what the good work they are pursuing now, that unnecessary goods and products should not be imported at this challenging time. It's not challenging for Bangladesh only. Many countries are now suffering massive. In Pakistan, it is now 43% inflation rate. They have got only 15 days import cash available. Pakistan rupee in January 2021 was 120 rupees per dollar, and yesterday it was 270 rupees per dollar. So it's coming from the problem. Many people say that USA is exporting their problem to the entire world because they're raising the rate, and Fed once again said that they will raise the money rate aggressively. So that means that dollar will be stronger further. So I think these challenges will be there, and in the capital market, we need to rationalize more disclosure requirements in the IPO regime and enhance responsibilities of the merchant bank. We need to examine this, and of course, we have to rationalize the valuation or price discovery methodology. And in case of a bond, last point, we are all working for improvement of the market so that the bond market develops. So bond means that a corporate wants to raise money. So if the corporate wants to get money from the bank, they get approval from the bank's board. And bank boards give the loan approval based on the Bangladesh Bank's circular that what are the compliance to be followed before giving the loan. I think in case of a bond, we may follow that instead of getting a prior approval, SEC can give a set of compliance rules like in India, what SEBI did, they prescribed formula and said the corporates can issue bond, an investor can invest bilaterally. Later on, the issue manager and corporates inform that whether they have issued the bond as per the rule. I think that will simplify the process significantly, and I am very hopeful person about Bangladesh. We are all working together. We hope that we can take the market cap from 20% current to 40% in next 10 years' time, and the bond market can be very significant in the days to come. Thank you very much for giving me a patient hearing. Thank you all.